Hi there everyone, Roxarmain here from HBCS, and in this video we are going to cover International Accounting Standard 41, which is related to agriculture. So we are going to cover what IAS 41 explains and what it covers. IAS 41 explains how we account for biological assets and agricultural produce, that is living animals, crops and plants. It tells us how to measure them at fair value less cost to sell, how changes affect profit or loss, and how harvested produce is treated under IS2. Understanding this standard helps you make sense of real life agricultural accounting and score high marks in exam. So in this video, we are going to cover IS 41 definition, scope like what it covers and excludes, recognition, measurements, presentation, disclosure, step by step framework, examples, exam focus points, and a quick recap. Assets in agriculture. Following are the assets in agriculture: biological assets, agricultural produce, and agricultural land. What are these? Let me explain you. IS 41 definition. Agricultural activity is the management by an entity of biological transformation and harvest of biological assets for sale or for conversion into agricultural produce or into additional biological assets. Now, what are biological assets? Biological asset is a living animal or plant such as sheep, cow, plants, trees, and so on. Agricultural produce. Agricultural produce is the harvested product of the entity's biological assets. Scope of IS 41. IS 41 applies to biological assets and agricultural produce at the point of harvest. What biological assets include? Livestock like cattle, sheep, poultry and fish, trees, crops and plantations. Agricultural produce at the point of harvest means milk at milking, fruit at picking, wheat at harvesting, and wool at shearing. IS 41 doesn't apply to the following items. Land related to agriculture would be covered under IS 16 or IS 40. Bearer plants like after maturity will be covered under IS 16. Agricultural produce after harvest will be covered under IS 2, and at the point of harvest or before harvest they will be covered under IS 41. Government grants will be covered under IS 20 and intangible biological assets will be covered under IS 38. Its recognition criteria. A biological asset or agricultural produce is recognized only if the entity controls the asset as a result of past events, probable future economic benefits will flow to the entity, and fair value or cost can be measured reliably. Its measurement. Initially, biological assets would be measured at fair value less cost to sell. Cost to sell include commissions, levies, transfer taxes, and what it excludes? Transport costs. When fair value cannot be measured reliably, then it will be measured at cost less accumulated depreciation and impairment, only allowed on initial recognition. Gains and losses. Under IS 41, all gains or losses from biological assets are recognized directly into profit or loss. This includes two situations. First, any gain or loss at the initial recognition of biological asset is recorded in profit or loss immediately. Second, any gain or loss at harvest, for example, when crops are harvested or livestock produces goods, also goes straight to profit or loss. A very important exam rule is do not create a revaluation reserve. Unlike property or equipment under IS 16, all changes in fair value must hit the profit and loss immediately. Presentation. Statement of biological asset. Biological assets shown as non-current or current assets and agricultural produce will be covered under inventory. Statement of profit or loss. Fair value changes shown as gain or losses. Disclosure requirements. Entities must disclose description of each group of biological assets, reconciliation of opening and closing carrying amounts, gains or losses from fair value changes, measurement methods and assumptions, restrictions on biological assets, commitments for development or acquisition, government grants related to agriculture. It's step by step framework. Is there any agricultural activity? Is the asset living like it's biological or not? Is it before or after the harvest? Because before harvest we are going to use IS 41, and after the harvest we are not going to use IS 41 on them. Does entity control the asset? Measure at fair value less cost to sell? Recognize any gains or losses in profit and loss statement? At harvest, transfer to inventory. IS2, provide required disclosures. Examples. For example, dairy farm. Cows are biological assets. Milk at milking are agricultural produce, and milk after milking would be covered under IS2 inventory. Exam focus points and common mistakes. High focus exam areas are definition of biological assets, fair value less cost to sell, treatment or harvest, burial plant versus produce, and profit or loss treatment. Now, the most common mistakes which students make in exams, they use cost model instead of fair value model, creating revaluation reserve, applying IS 41 after harvest. IS 41 will only be applied before or at the point of harvest, not after harvest. Treating land as biological asset, no, land should be treated under IS 16 or IS 40. Confusing bearer plants with agricultural produce. Bearer plants will not be covered under IS 41. A quick recap. IS 41 applies to living plants and animals. It will always be measured at fair value less cost to sell. Changes in fair value will go to profit or loss statement. At harvest, it will be covered under IS 41. After the point of harvest, it will be covered under inventory IS2. Land will not be covered under IS 41, and bearer plants should be covered under IS 16. This is from my side. Thank you so much.